Hi guys, in this video we'll cover, as investors, how we should feel about the US election and how the markets are reacting to the showdown next month. And this is a UK perspective and a short and sweet summary with a sprinkling of the facts. Hi, I'm Fifi, a mum and engineer and a consultant living in London, and I make videos about saving money, investing and understanding the economy to make better financial decisions. I'm not gonna lie, the news outlets always have a habit of sensationalizing the headlines. This is no different. Each US election is the most important election that has ever happened. The current election is no different, with commentators both inside and outside the US labeling it as the single most riskiest election that has ever taken place. What do you guys think at the other side of the pond? Let me know down there in the comments below. And by riskiest, we mean the most possible disruption to the markets. Likewise, there's also a possibility of a contested election. So a contested election is where the election result is not accepted and validity is questioned. If you put contested election into Google, first hit we get is that it's more feared than the pandemic's impact on the markets. Now, how mind-blowing is that for you guys? I know a lot of trading YouTubers use derivatives, options, etc. to make mega P&L. However, derivatives themselves are used by investors as an insurance policy, and they've been soaring, which makes the election now the most expensive risk event on record. And that is pretty insane as well. So why is it that the world's leading superpower, the beacon of democracy, is creating so much uncertainty and anxiety in the market? It is the uncertainty that is creating the backdrop. So President Trump, I hope he's doing okay by the way, stoked the anxiousness when he refused to commit to peaceful transfer of power if he were to lose the election. It's like stoking a bear, really. So it could just be posturing, or he could be serious. However, the S&P 500 has endured a really poor month, September, and it's down a couple of percent and ending each week lower. As an outside observer, it's down about 2.5%, and that's not great for sure, but not in the same quantum of the pandemic. However, and like I say, there is always a however, and as is typical of headlines, the bull market has ended and we have now done a full 180 and markets have...
I did that 180 but I meant 360. But I didn't mean 360, I meant 180. By the way, let's not do hand actions. Oh dear. So,
as I was saying, the bull market has ended and we have now done a full 180 or 360 and markets have turned for the worst. There is no doubt, guys, it will be a bumpy ride and we should see more volatility as the weeks and months play out. It is definitely not unprecedented. Take the Bush versus Al Gore contest in 2000. I remember this as I used to do little headlines for my school class as news bulletins at the beginning of each day, and the Bush versus Al Gore was always a headline update that I was writing about back then.
Can you believe that was 20 years ago? Gosh, I feel so old. How was that 20 years ago? Oh my gosh. The thing is, I am the worst when it comes to friendships. Like, I lose track of people around me quite quickly and it's really bad. But I'm sure I've got a few Insta friends from around 20 years ago. Boy, that is mad.
By the way, the election was not over until about mid-December and the S&P 500 tumbled by more than 8% in the intervening period. However, and there we go, another however, the past is not an indication of the future. And this election is definitely more polarizing than of elections past. So there is a real fear that a contested election would bring civil disruption and even violence. From this side of the pond, it is actually quite frightening to hear these types of stories. Now, normally from all my research and reading, chatting to my economist husband, as a long-term investor, we should ignore the politics. Though that being said, the election is impacting all sorts of asset classes. One of the favorite metrics to look at, and you should be aware, is the trading of VIX futures. VIX futures are bought as protection against volatility. So the trading behavior of the VIX, VIX, is a good indicator of how jittery the market is feeling. And it's a kind of indication of the nerves. And it's trending up over the last few months, but that's not as shocking as you would have been led to believe, right? Let me know what you think down there in the comments below. So let's take a more positive and pragmatic approach and say there is a peaceful transition of power. Will that mean a swift recovery and bounce? Not necessarily. The UK Financial Times noted this week that a peaceful election will not be enough to deliver a rally, unfortunately. In fact, the article goes deeper, which expects the investment community to expect a 60% likelihood of Biden.
Guys, what's the right way of saying it? I keep saying Biden, but then my husband keeps saying that I should be saying Biden. Is it Biden? I can see why it would be Biden, but also I can see why it should be Biden. Anyway.
So, as I was saying, the investment community expects a 60% likelihood of Biden winning the election, but that was not necessarily positive for the markets with increased tax rises and regulation. So, in fact, a clean democratic sweep of presidency and Congress is expected to be bearish for stocks, and only 15% of the investment community are feeling positive about that. So now, putting the election aside, we're not quite done with coronavirus. So in Europe, the second wave is clear and it will impact the US as well. The next 6 weeks itself will have COVID volatility. But as always, there's always hope pinned on vaccine and physical stimulus to brighten up Christmas. What does it all mean? Well, one thing I have learned is you can argue both ways, but it does feel like there will be downward pressure with multiple spikes. So it's going to be quite a nervy few weeks or months even. As always, it's interesting to have the context, but as long as you're a long-term investor, you shouldn't be too fazed by it. And we will be watching with interest over the next few weeks. And there is someone at the door. I'm gonna just wait for my husband to go and open the door.
It's coming down. Someone's coming down. There he goes. Parcel in. Door closed? No? Door closed.
Like I was saying, it's always interesting to have the context, but as long as you're a long-term investor, you shouldn't be too fazed by it. And we will be watching with interest over the next few weeks. 2020 has been quite a year and it's not over yet. I've linked a couple of videos up here which look at the macro. Do go and check them out. Also, I'll be releasing another video looking at the UK perspective a little bit more deeply. So do hit that subscribe button if you haven't already to ensure you're notified when I do. And let me know your thoughts down there in the comments below. But until next time, I'm out. Cheers, guys.